This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Goldman Sachs said it expects oil prices to climb to $80 per barrel in the fourth quarter of this year, arguing that the market has underestimated a rebound in demand even with a possible resumption in Iranian supply. The case for higher oil prices therefore remains intact given the large vaccine-driven increase in demand in the face of inelastic supply, the bank said in a note dated Sunday. Even aggressively assuming a restart of Iranian exports in July, Brent prices would still reach the $80 mark by the fourth quarter, it said. Oil prices fell last week after Iran's president, Hassan Rouhani, said the United States was ready to lift sanctions on Tehran's oil, banking and shipping sectors.
Oil prices rose on Monday as a demand bump fueled by COVID-19 vaccination drives gave traders optimism that the market can absorb any Iranian oil that would come on the market if Western talks with Tehran lead to the lifting of sanctions. Prices also got a boost on expectations that a new deal is less likely than it was last week, said Bob Yager, director of energy futures at Mizuho in New York. The Iranians and Western powers cannot get the details worked out that will get this deal signed and delivered, Yager said.
Moving on to the top news in the energy sector.
Iran and the UN nuclear watchdog are extending a recently expired monitoring agreement by a month, both sides said on Monday, avoiding a collapse that could have pitched wider talks on reviving the 2015 Iran nuclear deal into crisis. The move gives breathing space to indirect negotiations between the United States and Iran that resume in Vienna this week. European diplomats had warned that failure to extend the monitoring pact would endanger those talks, which aim to bring the two countries back into full compliance with the 2015 pact. The reprieve will only be brief, however, since the extension will expire soon after Iran's June 18 presidential election, which is likely to bring in new interlocutors for the International Atomic Energy Agency and major powers.
U.S. traffic volumes have almost returned to pre-pandemic levels, helping normalize gasoline consumption as more businesses reopen, domestic leisure travel resumes and workers return to offices. The volume of traffic on all roads was down by less than 4% in March compared with the same month 2 years ago, according to the Federal Highway Administration, Traffic Volume Trends FHWA, March 2021. Traffic levels had been down 41% in April 2020 at the height of the first wave of the pandemic and were still down 11% as recently as December 2020 during the second wave.
Next, we have the top news in metal markets.
China's government watchdogs warned industrial metals companies to maintain normal market order during talks on significant gains in metals prices this year, the National Development and Reform Commission, NDRC, said on Monday. The NDRC, China's top economic planner, along with the industry ministry, state-owned assets regulator, markets regulator and securities regulator, held the talks on Sunday with major domestic commodity companies and urged them not to drive up prices. The talks follow a statement from China's cabinet on Wednesday that the government would manage unreasonable price increases for copper, coal, steel, and
gold inched higher on Monday as a weaker dollar and U.S. Treasury yields bolstered its appeal, while investors awaited data due this week that should help them assess the pace of economic recovery in the United States. Spot gold was up 0.2% at $1,883.08 per ounce at 12:26 p.m. Eastern Daylight Saving Time, 16:26 GMT, having last week reached its highest since January 8 at $1,889.75. U.S. gold futures gained 0.4% to $1,883.90. A tick lower in the dollar and U.S. yields is acting in gold's favor, Bob Haberkern, senior market strategist at RJO Futures said, adding stronger equity markets were providing a counterweight. We will now look at the top news in the agricultural sector. Ukrainian farms have almost completed 2021 spring grain sowing, seeding most of the early spring grains and finishing corn sowing, Agriculture Ministry data showed on Monday. Farms had sown 176,600 hectares of spring wheat, or 99.2% of the expected area, the data showed. They also sowed 1.39 million hectares of spring barley, equating to 96.2% of the planned area, and around 5.3 million hectares of corn, amounting to 92% of the expected area. The Economy Ministry has said that favorable weather could help Ukraine to harvest at least 75 million tons of grain this year, versus 65 million tons in 2020.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.